Okie dokie. Okie dokie, everyone. Can I start off by saying either a good morning or good afternoon or even a good evening or even a good night, depending on where you are around the world. Thank you for joining me tonight on the latest episode of the Discover Trading series for Wise Banc. Tonight's episode is called Discover Gold Trading, written by myself, which is James Alexander, the Chief Market Analyst here at Wise Banc. Now, before we get on to the agenda of tonight's episode, let me give you a little bit of an introduction on yours truly. I'm, like I say, the Chief Market Analyst here at Wise Banc, and I've got over 20 years experience in the financial service industry. I actually started out at the age of 18, where I actually specialized in mortgages for commercial property, before moving into pensions and then alternative investments before entering the online trading arena. I've indeed traded myself through a prop company in Dubai Gold and Commodities Exchange, and I've run a trading room in the Philippine Stock Exchange, as well as several rooms in Berlin and Singapore. I am indeed a published writer. I've been published in several leading industry publications, including the likes of the Financial Times Advisor, Market Watch, which is the Wall Street Journal, The Street, and several industry magazines and newspapers. Whoops, wrong button. I'm also a very passionate and very avid market commentator. And some people have said I do like the sound of my own voice, which, yeah, sometimes maybe I do. And because of that, I have also spoken at a number of public speaking. I've actually spoken public speaker at several leading industry events around the world, including Singapore, Dubai, Kuwait, Qatar, London, of course, as you can tell, I'm a Brit, and more recently, Joburg and Pretoria in South Africa. Now, tonight's episode, like I say, is all about gold trading. And gold trading is something I'm quite close and personal with, because I actually started off when I started trading myself. It actually was gold. I started to trade gold options. And just to go to show how long ago that was, when I started, gold was trading around about $686 an ounce. That's way, way back in 2007. So tonight, we're going to be talking a little bit of an introduction on gold, which is the oldest currency in the world. Then we're going to talk about the ultimate love-hate relationship, which is between gold and the US dollar. Then we'll discuss yellow metal or gold being used as protection for global concerns and inflation, its safe haven status. Then we'll talk about the fundamentals behind gold. And then we'll discuss very briefly the commitment of traders report. Then we'll discuss supply and demand. And we'll finish off with my usual question and answer session. So if you have any questions for me, please hold off till the end of this presentation. Now, one of the oldest currencies in the world, and indeed gold is one of the oldest currencies in the world. And it's always played a key role in the monetary system. Gold coins first came into existence back in 550 BC by the order, let's see if I can pronounce this correctly, of course, King Colossus of Lydia. And it was internationally used for a source of payment. Now, when paper money was introduced, it was still linked to gold. And by the late 19th century, all major currencies were fixed to the price of gold per ounce, which was called the gold standard. Now, the Bretton Woods Agreement was a monetary system and exchange rate was put into place in 1944 and basically linked all currencies to gold holdings. But that agreement, like I say, was actually finished in 1971. Now, the ultimate love-hate relationship is really between gold and the US dollar. Now, let me just move on to my next bit. Like I say, is very much linked, and this is all really dating back, to the Bretton Woods Agreement of 1944, but like I've already mentioned, the ending of that agreement in 1971 by the then President Richard Nixon, Tricky Dicky. And basically, he ended the US dollar's link to gold. But despite that, US dollar remains the main global reserve currency. But other currencies, such as the pound sterling, was also allowed after the Bretton Woods Agreement to become free floating. Due to this action, there was and there has always been a very key relationship between the yellow metal and obviously the greenback, the US dollar. Now, you can see this in the direction it moves. Now, my chart on my left is the gold US dollar, and the chart on my right is the US dollar Japanese yen. And you can see that it's very closely linked with the US dollar. And what is ever happening with the US dollar tends to impact the value of gold. Now, here is a chart. Okay, this is a monthly chart. And around the time of the financial crisis of 2008, to start or restart or reboot the US economy, the Federal Reserve, or the US Central Bank, introduced quantitative easing, basically meaning they were printing more money. And like when you have a lot of supply, it often weakens the value of that asset. In this case, it greatly weakened the US dollar. And as you can see, gold prices skyrocketed to then an all-time high of around about $1,986 an ounce. However, at 2013, the Fed actually announced tapering, which basically was reducing quantitative easing. And as you can see, the dollar gained strength, weakening the gold prices. Now, you can also see this with the dollar Japanese yen. Okay, so this is the chart here. Round about the time the quantitative easing was happening, as we can see here, US dollar prices actually started to collapse against the Japanese yen, or dollar actually weakened against the Japanese yen due to quantitative easing. And then when the introduction of tapering, the dollar again gained strength against the Japanese yen. And you can also see this in the gold US dollar bull run against gold. Now, here's another example for you. This here, okay, this again is a daily chart. And we can see that on November 2016, when Donald Trump surprised everyone, including myself, including all the critics, he actually won the general election in the United States, which weakened gold because the dollar went on a massive bull run. And you can also see that because you can see gold is linked, to whatever the dollar is doing. The dollar is weakening. Again, say against the euro, for example, you can see the same thing happened with the euro prices against the dollar when Trump won that election. So we see whatever the dollar is doing, either weakening or gaining strength, it can greatly, greatly affect the value and price of gold. Now, there's some key indicators, obviously, which affects the US economy, but can also move gold prices. And these are some of the key economic indicators you need to watch or closely monitor if you're looking to trade gold. Trade balance, the non-farm payroll, which is a very big one and potentially a very big market mover. Oops, a daisy. Oh, blast. Excuse me, ladies and gents. Slight technical. There we go. Slight technical hiccup. Gross domestic product of the United States. Retail sales. As I've often said before, our modern day economy is based on us buying as much stuff as possible. So retail sales can have an impact on the US dollar and gold prices. And industrial production, of course, can also have a big impact on gold prices, and interest rate decisions. Because don't forget, interest rate decisions can actually make a currency stronger or weaker, and again, can have a big impact on gold. And of course, FOMC statement. Things like this gives an indication to the market what monetary policy might be happening at some point, and when interest rates may be discussed or indeed risen or decreased. Now, the other thing, or the other factor to bear in mind in gold, it is a safe haven. and it's a well-known safe haven. Now, there's an old saying that you should always try and put, again, this is not advice, this is a saying, okay? You should put 10% of your money into gold and hope it goes down. Because when gold prices are moving higher, basically means everything else around is going wrong. And so gold is known as a safe haven. Because when there's times of global recession or conflict, gold, along with other safe havens like the Japanese yen and Swiss franc, can indeed benefit. Gold is also known as a great store of wealth, and as though it has a very tough relationship with the US dollar, economic indicators can directly impact it. So positive indicators can weaken it. Negative results from these economic indicators can indeed strengthen it. Now, again, keeping with safe haven and keeping with market sentiment, when you tend to see a bullish market, okay, then you see gold prices weaken because people move their money into riskier assets. And here's a prime example for you, okay? I have gold on my left chart here, and I have the S&P 500. So when things are good, when people are confident, when the sentiment is bullish, people will move their money into riskier assets like the S&P 500. But when things are bad, when people are nervous, they move their money into gold. And as you can see here, gold and the S&P practically moves in totally different directions. Hints of conflict. Like I said, when there's concerns or possible military conflict or anything of this sort of nature, gold again benefits. People put their money into it again because it is a safe haven. Now, here's an example for you. Could anyone remember back in 2017 when Donald Trump, he's such a cool guy, isn't he? No, of course he's not. I'm joking. Can you remember when Donald Trump started threatening North Korea with the so-called fire and fury? And as you can see, gold prices skyrocketed because the market started getting concerned that indeed there might be a global conflict on the way. And of course, it has correlation with several currency pairs, in particular, the Australian US dollar or the Aussie dollar, shall we say. They're very, very close because it makes sense because Australia is the biggest miner of gold. So when gold prices are going up, the Australian dollar can indeed strengthen. And when gold prices are going down, again, the Australian dollar can indeed weaken. Right. Key players in supply, because don't forget, it's a physical commodity. Though we're talking today about it as a CFD, it is also a physical commodity. So these are some of the major suppliers who actually mine and distribute gold. Like I say, we have China's mine productions at 440 million tons, Australia 300, Russia, United States, Canada, Peru, of all places, and South Africa. And this can indeed affect prices because when supply is weakening or supply is going down, obviously the value of gold can indeed go up. And it's the same time about demand. Physical purchases by countries' central banks can indeed also increase the value because if there's more demand for something, more valuable it becomes. And here's some of the largest gold reserves in the world. We have, this is obviously reported by the World Gold Council in June 2018. We have the United States at 8,133 tons. Germany, 3,371 tons. Italy, third. France, fourth. Russia, fifth. China, sixth. And Switzerland at the end there. So reason why I'm putting this out is because obviously if this demand for these countries for gold as a reserve goes up, then of course this can affect the price of gold, possibly pushing it higher. If demand goes down, then it obviously can have the opposite effect. Now, the commitment of traders report. This is very good to find out what the market is actually doing and who's buying and who's selling, and also give you an idea of market sentiment. Now, the Commitment of Traders report provides the breakdown of positions opened or currently opened as of a Tuesday in the trading week on the major exchanges in the United States. The report separates into two groups: traders, the speculators, and commercials. So there's the two types of traders, the speculators and commercial. Speculators are those who are looking to gain profit by going in the right direction, whereas commercial traders includes merchants and producers who are looking to purchase positions to hedge their physical purchases. So don't forget, this report is completely free. It is available wherever you need it. It's a very good report to read. Like I said, it's a Committed Traders report. And this is how you can read it, for example. There's our speculators. So those are the traders who are looking to trade, go in the right direction, and profit from the directional movement. And then you have the commercial. These are the guys who are buying these positions to protect themselves because they're physically buying materials, so they're hedging their orders. Okay? So we have our long, the amount of long positions, our short positions, our long positions for commercial, and our short positions, okay, for commercial. So how you read this is, if the speculators believe something's going up, they will buy a lot of long positions. If they believe something's going down, then they will obviously buy a lot of short positions. Commercial will do the same. If they think something's going up in value, okay, they will hedge themselves by shorting. And if they think something's going down in value, then they hedge themselves by longing. Now, future educational events coming up. We have on the 29th of November, we have Discover Why Fundamentals Matter. Then we will be releasing the December webinar series, probably sometime next week. So you can guys all get prepped for the next couple of episodes of the Discover Trading series. So if you wish to contact me, you can indeed email me at james.t@wisebank.com, or you can follow me on my Twitter account, which is at James Alexander T. You can direct message me or indeed follow me on my Twitter account. It's actually quite new, but I do post charts and areas of interest and market updates. So, if you want some little tips or little things of what's going on, by all means, please follow me on Twitter. Right. Any questions from you fine people? Anything you people like to talk or ask me at all? Any questions at all? Don't be shy. Come on, any questions in relation to gold? No questions? Did everybody at least enjoy it? Did you find it useful and interesting? Okay. Is there any topics in the future you might like me to cover? Like, I don't know, maybe you want me to do a case study on, say, the S&P 500, for example. Because don't forget, these episodes, they're for you. They're for your education. So I write them for you. So if there's anything in particular you want me to cover in the future, any topics or areas of interest, please let me know, and I will happily write it and present it for you. Any other questions at all? Any questions related to maybe the market even, or maybe even to gold? Anything anybody like to ask me? And if I know the answer, I'll be more than happy to help. Ah, Andre, brilliant. It was very interesting. Excellent, Andre. Glad you found it insightful. You coming to next week's one on fundamentals? I will. Oh, brilliant. Brilliant. Well, I look forward to seeing you on that. Is there any topics maybe in the future you'd like me to cover, or anything you'd like me to write or produce? No? Okay. Is there any other questions at all? Anything else anybody would like to ask me? in relation to gold? Not for now. All right, brilliant. Okay. Okay, that's fair enough. All right, guys and ladies, of course. If there is no other questions, I will wrap it up. If you suddenly think of something you want to ask me, please feel free to email me. Okay, or like I say, indeed, contact me on Twitter or follow me on Twitter, whatever you wish. Okay. Oh, you like gold? Brilliant. Good. I've got a close relationship with gold, Andre. So I do a lot of charts on my Twitter as well, if you want to follow, because I do discuss gold a lot. Because, like I say, I have a special relationship with it. It's the first thing I ever traded, so I do have a soft spot for the yellow metal. Okay, if there's no other questions, nothing else at all, I like to help. Please feel free, like I said, to contact me if there's any questions you want to ask me later. Till then, can I wish every single one of you either a good morning, a good afternoon, or a good evening, or even a good night, depending on where you are around the world. Don't forget to rate this webinar at the end, or let me any comments or feedback for future things. But till next time, can I wish everybody a cracking, amazing day, and all of you trade safe.